Hi, everybody. Welcome to episode 8 of The Bulls and Kangaroos. Good evening, Stephen. How are you, buddy?
Morning, Peter. I'm good, thanks, mate. I'm good. I'm good. How's your week been, mate?
Yeah, it's been a good week. Busy week at work, lots going on. The weather's been really good here in Spain. Had a absolutely brilliant weekend. Actually able to get the toes in the sea for the first time. It was a little bit fresh, but it was good.
Yeah,
It was
yeah,
very
good,
nice.
good
And
man,
what
good
about
man.
you?
Yeah, been good, mate. Been good. We're at that point now in the year, aren't we, where the clocks have changed, and so like I've gone backwards, I've gone forwards, you are backwards, you've gone forwards. So it's 5:30 in the morning for me at the minute, and it's 10 p.m. in the evening for you. So we
Yeah,
we're, we're
yeah.
just about on the limits of being able to coordinate these, but I think we're going to figure something different out, aren't
Yeah,
we?
of course we will. It's all about finding solutions, and
Yeah.
we've already got a few ideas. But it won't deter us. We'll keep going. We'll keep throwing out our dribble and content every single week. So don't be worrying about that, anybody. So then, really, what I was going to start with, Stephen, is I know you've been doing some work this week, and I think you've got some interesting experiences to share about a trade.
Yeah, okay. So this one was a little bit frustrating, but I'm going to tell you
Hmm.
all about it. So yeah, take a look.
Okay, guys, let's see what Stephen has to share today. Enjoy.
Okay, so I want to take you through a trade that I was involved in this week, and it proved to be a little bit frustrating, but you'll find out why. All right, so it's on a pound dollar, and I'm on the 4 hour trading time frame. I'd previously done the higher time frame analysis on the daily time frame, and so what that had allowed me to do was to identify that price action was in a bit of a range, really. And I marked on the upper part of the range, the sort of the top of the range, and that's this red bar here. And I'd also marked on the bottom of the range on the daily time frame, uh, so that when I transfer down to the 240, the 4 hour time frame, I can still see the extents that I want to have in mind when I'm thinking about what I'm going to be doing on my trading time frame. So I've had a look at the price action that's moving along, and then when after it gets down to this bottom of the range, this bottom level there, and then it moves up, and then it hits this little consolidation zone, and then it puts in this big bullish candle. Now, what I'm thinking after I see a candle and a move like that is there an opportunity for me to take advantage of any relief that comes following a move like that? And you'll see that the price action sort of loses a bit of momentum as it comes up to this level. Well, when I look left, and I've marked it already with this blue line, when I look left, I can see, and I've put the blue line at the top of the wick on this candle over here, just to mark this intermediate range that I'm looking at. I'm looking to see whether or not price action actually breaks above that level. And even though it comes close, this candle is that candle there. It closes at exactly the same price as the high of this candle here. So there's no break above, close above. If there was, that would put me in a bullish bias, and I'd start thinking about what might happen following that. Uh, following that. So I'll just get rid of that. Because it didn't break above, close above, and then the next candle that printed was a pin bar, a bearish pin bar. And so again, I'm thinking this level at the moment doesn't really want to be broken. The bulls are trying to push up, but the bears are just keeping us from breaking above that level. So this put me on alert for a trade entry that I use called a 3 bar reversal. After that pin bar, I'm looking for a lower low, lower close. And in fact, you can see there that the next candle, I get that lower low, lower close. as preparation for this potential entry, I've already started thinking about where targets might want to be and how the stop loss position will look. And, I can estimate where that's going to be based on previous ATRs. The ATR is what I use to help establish a stop loss level. And I'm allowed to use an ATR to put my stop loss between a 1 ATR and a 2 ATR. So in this case, after I printed it out, mark it on the charts, that took me to 1.2700. Now that's an even handled number. And my rules say that I can't be on that stop loss, can't be on that even handled number, because price action and psychology and people like even handled numbers, and so that might attract price to it. So I've got a rule that says I'll put my stop loss 5 pips beyond an even handled number. So that's where I am, 127.05. Target level, I looked down at this little consolidation area and thought to myself, that seems like a reasonable place to put targets following that big bullish candle I talked about. So I set targets for down there. I measured out the target, the potential pips profit, and that came to 68 pips on there measured, and checking against what the risk was, which was 63 pips. So I'm just over a 1-to-1 reward to risk profile there, which sits within my rules. Okay, so the trade's on, stop loss is set, target set, and I've gone to bed. This candle, this bearish candle here, that closed at 11:30 p.m. I'm asleep at that point. This candle, that closed at 3:30 in the morning. And then when I get up and get to the charts, price action is back up around here. And this is what I want to talk to you about, okay? The wick on this candle came to within 2 pips of hitting my target value. So that was frustrating when I've got up in the morning and I've seen that that's happened. And then I realised I haven't got a rule in my playbook and my trading plan for what I need to do next. And I'll tell you what I was thinking. I predicted a move following this little 3-bar reversal. I predicted that price would move down. I put in where I thought price would get to, and I'm relatively happy with that prediction as well. But I've just missed out and I haven't been able to profit from it. So in my mind, the move's already been made. The move's been made that I predicted, and now price action being up here, it's just in no man's land. This isn't a trade that I predicted I would be in. So, and because I haven't got a rule to say what I want to do in this instance, what I ended up doing was just letting the trade continue until eventually I got stopped out up at this 127.05 level. So that got me to thinking I need to try and figure out what I'm going to do in these situations. I think what I'm going to do is I'm going to have that rule where if I think the move's been made, well, then I can exit the trade. I'm going to put that to a few of the groups and the chats that I'm involved in and just see what other people think. Also, another thing that I was thinking was it wise of me to put targets at the bottom of the zone that I identified? Like the bottom of the zone, maybe I was just trying to push a little bit too much. The only thing there is if I put targets up at the top of the zone, then I need to make sure and double check that hasn't adversely affected that reward to risk profile. So yeah, a couple of things to think about there. And it was a little bit tricky. I was a bit frustrated, but as always with trading, you discover these things and then you take them on board and you try and tweak your trading plan and you try and learn from it. I can go back over some of my old trades on this pair and this strategy, and I can say, I can have a look and think, well, has this happened in the past? And I don't remember seeing it, but maybe that's just because I'm in backtesting frame of mind and now I'm in live. I'm presented with this situation where I've got money on the table. I'm in a live situation. I feel like I should have hit target, but I haven't, and I didn't know what to do. So now I've got to think about what I want to do and put some plans in place for the next time.
Okay, Stephen. Oh, how frustrating is that? Missed a trade by 2 pips. How you feeling?
Oh, do you know what? Like we sort of said, it's a bit. That's what trading is, I suppose, isn't it? And you can't be awake 24 hours, can you? So you just got to figure out how you want to be able to deal with these things, I suppose. Yeah, but yeah,
Mm,
frustrating a little
mm,
bit, mate.
mm.
Yeah.
Yeah, I had a couple of questions I wanted to ask you actually. The first one was here. During the back testing of that particular pair, did you come across that scenario
Do you know what?
once or many times?
Well, as I think about it, I've got no like recollection of seeing price action come that close to the targets but not make it. So what I'm going to have to do is, if I want to investigate it more, is I'm going to have to go back and have a look at the back testing results. And that's why it's important to keep your little screenshots, isn't it, of all of your trades as well,
Yeah,
so you can actually
yeah.
have a look at it and it's not just numbers in the spreadsheet,
Yeah, no, we've talked about that before. I think I covered it in one of my previous videos. I think it might have
Mm.
been week 5 or week 6 now, where I covered that off, where I was showing on my spreadsheet where you just take that screenshot, shrink it down, and
Yeah,
at least you can go into the trade and just open it up and you've got full visibility.
exactly.
So, okay then. So another question around here is, so what's the process that you're going to
Mm.
use to actually invest further? If at all, like say, look, it's just happened. It's the first time you've seen it happen. It's just part of trading. I'm not sure. What's your feelings?
So when I first saw it, I thought, oh, I'm going to go back. I'm going to look at all of the trades. I'm going to find how many
Hmm.
times it occurred. I'm going to make a little rule if it comes within a certain amount of pips. That was my
Hmm.
first reaction. And then I started thinking, well, how many pips does it have to come, towards target? Is 2 pips the limit, or is 5 pips the
Hmm.
limit? And like, do I want to go down that rabbit hole of trying to tweak the system and for maybe a handful of
Hmm.
occasions that might happen over the 100 odd trades that I've back tested. So
Hmm.
um, I'm just conscious that I might go off down a little bit of an academic exercise pathway. But I'll take a look and then I'll
Hmm.
decide whether or not I want to change any rules. But the one I'm sort of
Yeah.
leaning to at the minute is, yeah, I mean, 2 pips, it's an arbitrary number, isn't it? But I want something that will tell me I can get out of the trade if it comes close and then makes this big reversal, because you
Yeah.
sort of sit there watching it, waiting. You feel like you're waiting for it to be stopped out once it's come that close to the
Yeah.
target. I don't
Yeah.
know.
So
I haven't
what?
decided, mate.
Yeah. So what you're saying is that you may look and investigate a way that if it does miss by X number of pips and you see a reversal pattern, then you just close the trade at break even or something like that. That
Yeah,
kind of a thing, or
that
potentially or minimum loss.
that I'll have some
Yeah.
rule,
Yeah.
but then I know that would be fraught with other dangers as well, because sometimes the price action might move back away from the target, but then it might come
Mm.
back. So I'll probably be eliminating some winning trades as well. So it's
Yeah.
a careful review that I need to have a think about,
Yeah,
really.
yeah, and what you're saying is you basically be careful you don't disrupt a winning strategy. That's what you've got
Yeah,
to be careful of, isn't it?
yeah,
You
yeah,
know?
yeah.
Yeah.
That could be
Okay.
one off for all we know at this point.
Exactly. Exactly. And we know that through our experience as well, and what we've learned as traders is that different pairs have different characteristics, and
Yeah,
sometimes these weird things happen, and who
yeah,
knows what it could be, But an interesting thing, actually, I think this would be also a great opportunity to invite all the viewers who've come across this kind of thing before in their own trading
mm,
and what they did. How
yeah,
did you, when you missed that trade by the 2 pips, what did you do? How did you feel? Tell us, just share your
yeah,
emotions
yeah, yeah,
and what actually happened, and we'll be glad to even bring it up as maybe even a topic on one of the shows. So,
yeah. Definitely.
Okay, mate. Thanks very much for that.
Okay.
And it's so interesting actually because my video this week, purely by coincidence, doesn't obviously focus on about missing a trade by 2 pips, but it does focus on an observation that I've made in the early stages of my backtesting. So let's take a look at my video.
Okay.
Hi, everybody. This is my video for week 8 of the podcast. I wanted to share with you an example of a reason why when you do keep the records that we're keeping from our spreadsheet, that you can start to notice and pick up a few things and make some extra notes on the chart. And I've actually come across a situation like that. What I've noticed in my back testing is that at the minute I've had 3 losing trades, and I've already spotted a common factor. Now, you'll see here on the chart, I've actually highlighted with 3 arrows these 3 touches. So this is actually a valid entry. Let me just get the crosshair. So we've had our touches, which is part of our rules. We've got 2 candles closing in the right direction. But as you can see here, we'll be entering on the next bar market or next candle. And as you can see, we've not had a single candle that's closed in our direction. Every candle's green. And a number of days later, over here, we've been stopped out. Now, when I've recorded that on my spreadsheet, I've noticed that there's 4 trades that I've taken with this let me just take that away a second, might be better. I've noticed with 4 times I've taken trades with this setup where we've got touches. And 3 out of those 4 trades have actually been losing trades. So I'm not going to change anything about the rules at this particular moment, but as you can imagine, it's something now I'm thinking, okay, this may be cause for me to change my rules. So what I'm going to be doing now is I'm going to record this trade as I've been doing with all the others, take the screenshot, and I'm going to put a little note here on the chart to highlight this particular fact. Well, it stands out, but I'm just going to put a little note here as well. And so these are the sort of things that you discover during backtesting, and what makes backtesting so important. And again, making any strategy your own. It would be very easy for me to take that strategy off the shelf, not backtest it, and say, oh, someone else says it's working, and belt it away and started trading. So there we are, guys. That's a learning point. Well, not really a learning point. It's an observation that should be a learning point that we apply into our trading rules, and all goes towards making your strategy your own. Okay, back to Stephen. Thank you. Hey, Stephen, what did you
All
think
right.
of that?
So yeah, it's there's some similar aspects there, isn't there, between our videos, and I think
Yeah,
the common link there is really around recording what you see,
yeah,
and then being able to go back and pick out some of those common scenarios or those commonalities,
yeah,
um,
yeah.
and being able to think about whether you've got a pattern or a repeated behavior that
Mm.
you can have a look at what that does to your expectancy or your
Yeah,
strategy
yeah.
performance. I mean, what would what would your sort of next steps be
Well,
there?
obviously, I've noticed it happen on a few occasions. So what I was thinking of doing actually was actually maybe just marking the chart and marking the sheet, maybe just coming up with but maybe, I don't know, maybe like just an asterisk or something on those particular trades, and then just see how much is repeating, and then just go back and use it to maybe adjust my rules slightly on it, and maybe use it to more for optimizing the strategy when I come to it. But I think you made a good point. We were talking off camera before we came onto the show this evening, myself and Stephen, and we were talking about ideas. And Stephen was saying it may be a good idea for me to mark my chart up with a couple of arrows to pointers, so I can actually then, with my screenshot, I can visually see the things quicker rather than me just going back to the chart and looking. So that's something else I'm going to do. So thanks for that tip, Stephen. You know, that's the one great thing about doing these things together, is we're able to share the experiences and pass on some best practices.
Yeah, because
So
I think, yeah, definitely you want to make it easy to see quickly. And once you've see that a number of times that particular occurrence or that little sort of dip down, get an entry, and then stop your order straight away. Once you've seen that happen a few times, and you've highlighted them in your spreadsheet and your back testing results, you can think about taking them out and see what that does to the overall
yeah,
strategy
yeah,
performance then, can't you? And that's when you
yeah.
can start like optimizing once you get to the end of your back testing. So it'll be interesting to see how that all pans out, mate. Yeah.
Yeah, and as you say, even like at the end of the strategy, and you say like you ended up with only, you end up with 100 trades, and you take those out, and you've got a sample set of 90. You've still, in kind of a way, you've still got that sample set of 100 because you've eliminated 9 or 10 trades that you wouldn't have been in. So
Yeah,
that's
exactly.
another 9 or 10% that's sitting in your pocket, that's generating you profit in other ways in your other trading. So
That's it. Don't go
yeah,
broke.
don't go broke. Exactly that. So I think that probably concludes this week's show. So uh, any sort of week ahead now, Stephen, before we close off, with regards to your content for next week? Any plans?
Well, there was a couple of big movements again this week in the dollar that sort of spoilt a few setups that I was waiting for. Dollar yen seems to have broken above a long-term high that's been in place since like 1990, so that's all new territory for a few things. So I'm just plodding along, going through the motions, sticking to
Just
the plan.
keep following it, yeah. And on that note of following the plan, as we like to say and like to wrap up each of our shows, please be part of that 10% of traders, that 100% trade your plan. So until next week, wishing everyone a great week. Thanks a lot, Stephen. Bye,
Cheers,
everybody.
Peter.
See you. Bye-bye.